Hello, I'm Anna Sell for Beneath the Surface with Scott Gibson. Scott recently sat down with Mickey Fulp of the Mercenary Geologist. Mickey gave us a review of 2011 and an outlook for 2012. He also discussed why he feels that Dr. Copper has a PhD in economics. Enjoy.
Hi, my name is Scott Gibson with Kitco Gibson Capital. Welcome to Beneath the Surface. I'm here with Mickey Fulp, the Mercenary Geologist. Mickey, thanks for being with us.
Thanks for having me once again, Scott. Always a pleasure.
Good to be back. I wanted to talk a little bit about the volatility we've had in the market, specifically in the resource sector over the last few months, and get your comments on what sort of transpired and what you see coming going forward.
Okay. Let's just do a kind of a year 2011 review. So we started with a very boisterous market, lots of money being raised in Q1 of last year. And there was a lot of paper that had 4 months hold, and we started seeing that coming out right at PDAC. And I think we talked before how the pros kind of front ran the sell and may go away adage. And so the market started dropping in post PDAC, continued to drop, and then the summer doldrums and continued going down and down and down. And then we got hit by another panic, and a 30% commodities correction across the board in September drove the juniors down again. And lo and behold, very soon we're in tax loss selling season, and there were a lot of people, as retail investors often do, they buy near the top of the market. So there was a lot of massive tax loss selling in December, which drove the market to probably 3-year lows as a whole. The venture index touched back down somewhere around 1,400.
Right, we had sort of one event after another all through the year that led to that sort of lows in December.
Yeah, so what's happened since first year? Well, a rebound as we expected. So I am cautiously optimistic for junior resource stocks. We could have bought some of these things, and I did buy a couple of favorites in December, but I was also tax loss selling because we all make mistakes. Had a few dogs in the portfolio, shed those, tried to get to that, for Americans, that short-term capital gain break-even point. So I have to pay the higher tax rate. Right. And I loaded up on a couple of companies during this period of time. And now we're in 2012, and things are looking much better.
And what's your expectation over the next 12 months? What do you think is going to happen with the various resource commodities?
I am bullish on commodities for 2012. Now that has to go in with this idea. I'm a long-term secular bull for commodities driven by China and India and everybody there wanting to be middle class. And of course that's happening also in Brazil and Indonesia. So what I call the BIC countries, not the BRICS. I leave Russia out of it. You know, the mafiosos in Russia, who knows where that country is going to go. And it also has bad demographics with no young people in the population. So because of what I see as strong demand, China is slowing somewhat, but we are still very much seeing demand. And the bellwether of all commodities for me is copper.
Exactly.
And copper has the PhD in economics. The world's economy is basically controlled by energy input. Oil has a lot to do with the economy, but oil is so geopolitically maneuvered, like, you know, the Straits of Hormuz right now. If Iran shuts off, who knows what's going to happen. But Dr. Copper, PhD in economics, looks strong to me, and it's been a while since I've been bullish on copper. Got ahead of itself last year, had the 30% correction, mucked around for a while. Now we're seeing a very robust copper market with cancel warrants increasing, and that's copper going out of warehouses, the cancel warrants. We see warehouse inventories going down. So for me, that's bullish on copper, and I think we can carry that on to the entire industrial commodity sector.
Mm-hmm. And how about gold in terms of your expectations of the resource sector and the various different commodities? Have a good positive outlook going forward in the next 12 months. What's your take on gold?
Well, we all know that gold drives our market, the junior resource market. I am a long-term bull on gold. I am not a gold bug, so I'm not going to tell you gold's going to $2,500 or even $2,000 this year. What I would expect, and I'm looking at the past, I'm saying for the last 12 years, gold started the year higher than it started the previous year. So I expect that trend to continue. And that basically has to do with every country in the world is operating on fiat currency. Every country in the world is printing more of their fiat currency. That causes their currency to be devalued, and we all know that gold retains its purchasing power. So I would expect gold to be higher when we sit here a year from now, knock on wood, and that we're both here and in good health. But I would expect gold to be higher than its current value, around $1,650 an ounce.
$1,650, okay. And
higher than
$1,650
than its current value at around $1,650.
And in terms of the various different resources, is there a particular one that you're looking at when you look at junior mining companies and what you might be investing in? Or are you sort of open to things across the board, given the pullback we've had in most of the junior resource stocks?
My general bullishness about commodities leads me to not be very commodity specific right now. I remain a uranium bull, so I've looked at some opportunities and taken some opportunities in a beat down uranium sector, and that sector has started flying this year, and there's a buzz about uranium at this conference. Copper, I recently covered a copper company that is an ISR play, in situ recovery play in Arizona. It's bullish on copper. Another thing I've recently done is the flavor of the year, I think, is going to be graphite. And I look at the graphite sector, and it reminds me a bit of the rare earth element sector in 2009. I think that this could be the year of graphite. If you notice, there's all these new graphite projects popping up, and I would dare say that every snake charlatan and shark in Vancouver is trying to promote a graphite play in a new company right now. So you need to tread cautiously, but finding a good graphite play, and I found one, and I'm an early shareholder of a company that's going to be trading in a couple of weeks in the graphite space. So finding a good graphite company might be a good thing to do right now.
Nice, nice. So not just graphite, gold, and base metals and copper across the board.
All across the board. So I'm still looking for natural gas to make a rebound. I don't see that happening in the near term or even the midterm. We've got some bad supply-demand fundamentals for natural gas. We have too much supply and we don't have the infrastructure. But all the other commodities, pretty bullish for 2012.
Now, in terms of the particular stocks, is there a stock or two that you like out there that's publicly traded right now that you find has great management, great opportunity, great upside?
I'll give you one right now, and that's Curus Resources, this ISR copper play. I am very bullish on them. I cover them. I own them. It's trading somewhere around 90 cents to a dollar right now. This was a $2.70 stock a year ago. Got kicked really hard. It's got great fundamentals. Should be producing copper this year in Arizona. So, and the ISR process, a well field. It's not a mine. It's a well field. So very environmentally benign and no surface, very small surface footprint.
And the management team behind that?
Hunter Dickinson Group.
That's the thing, we want to go with success.
Absolutely.
Hunter Dickinson is a great group to go with.
Yep.
Well, thank you very much, Mickey. We really appreciate your comments on copper, the metals across the board, gold, and to mention one of the companies for us.
Okay, thanks a lot, Scott.
Again, that's Mickey Fulp, mercenary geologist. My name is Scott Gibson with Beneath the Surface. Thanks for being with us.
Thank you for watching Beneath the Surface with Scott Gibson. Stay tuned for more.